Good afternoon, everyone. It is Thursday, June 25th, 2026. My name is Mark from BluntHouse Technical Analysis, and guess what? We are looking at the weekly Bitcoin chart. And I want to take you back, if you go back in our streams, I want to take you back probably a few months now. And we did a couple things. Because we understand that current price looks for past price and that when we break one level we find the next, we started to look for these benches of past price. Areas where price has been before and has formed over time areas of support and resistance. And we dropped these three levels on our chart. And the first one you can see is right in here at around 72.8. And it's not pin the tail on the donkey. We do this on the fly really quick, right? And we drop that level on there. The next level we drop down here is that amber level, and that's at 58.450. And then the third, 42.2 and change. Not pin the tail on the donkey, but what are we doing? We're looking for benches of past price where buyers and sellers have shaken hands in the past and are likely to sit on those levels if they can't find support. So you ask, support off of what? Well, let's get into it. Support off of these major moving averages. Now, the major moving average is just simply a representation of time and price, right? Let's not get in the weeds and try and get too anal about what it represents and what it does and doesn't do. It is simply a benchmark. Don't complicate it any more than you need to. But we know that when we're trading above all of our MMAs, that we're obviously bullish. So once you break one level and you find the next level, break the 20, find the 50, and then you break the 50 in here. First attempts typically get support, right? If you're moving up, the first time you hit it, you'll typically find support. If you were moving this way from down under it, you would be rejected. But first tag, you bounce. And then you bounce again. Except this time, the third time, you don't bounce again. Right? So you break one level, you find the next level. This time, you break the level that you're getting support off of. So we know that if we break this level, we find the next level. Do you remember going back in here, trying to warn everybody, don't fall in love with these candles? Remember that? Why? Because we were being told by the T-line and the 5 EMA that the downtrend was still intact. So yeah, you can have some upward momentum, but do you actually break anything in the form of trend? Right? Probably not in this case. And then your 5 and 8 are diverged as you hit a major moving average. See, like here, and then this is obviously the breakdown. When they're open like this, as they approach that major moving average, there's a very slim chance it bounces because it's expressing to you the momentum that it has in the move. So you break that level, and guess what? You find the next level. A little bit of a failed breakout, retracement, right back to this level at 58 and 58.450. Now, at the time, we were crazy because of the 72 number. Even crazier for the 58 number. How crazy does it look at 42? Still, everyone's going to say that's impossible. Well, you know what? In TA, we're not worried about what people typically think is possible and impossible. The chart will tell you what is possible and not possible. And right now it's telling us that it's kind of possible. right? Let's look at the volume profile, because it's going to tell you where the volume is in here. This is the point of control. This is a fairly fat shelf, but not in here, right? That's a big gap. Price goes in and out of these gaps like a hot knife through butter. In this case, it was downward. And the reason is because there's nothing in there to hold price up. Unlike in this area in here, right, where price has been before and has significant trading, right, back in here. Now, the weekly chart should not look foreign to you, right? The weekly chart should be something that you start with. And I'm going to tell you why. Because if you get into the type of market that we're in now, and you're of the belief that the only way that you're going to be able to survive and to make money is to long, does that chart look conducive to that strategy? No, it doesn't. So why would you be trying to long this kind of falling knife, right? This is like a serrated edge, isn't it? Why would you try and do that? Because, well, first off, that's all you know. And secondly, you're not even looking at the weekly. Never looking at it. And I know that many of you are guilty of this, right? And I'm not saying these things to be critical, because, you know, I was at one time had all kinds of bad habits too, and probably still do in some ways. So it's not an attack. But you have to be looking on at these longer term time frames so that you can understand what the trend is. Like, this is real difficult to make money long. Tiny opportunity to make money long. Not really any opportunity to make money long. A little in here, and then of course you roll over all over again. And what do we know about these failed breakouts, regardless of time frame? This is a weekly. We show this on a 5, 15, hourly, and 4-minute all the time. Roll over, take out the previous wave's low, and that's what we've done. And we've come back to this level that many of you thought we would never see again, but yet here we are. And we still have another level to check. And down here, just as we throw the volume profile on, you can see the lower value range. All of this, if you don't hold this level here, all of these things become a draw for price, and then what do you have back in here? Another gap. We basically walk you through, in this case, the breakdown. Trading above all support, fail the level, come back to the 50, but this time you don't hold, right? Because every time you test it, you increase the probability that the next time you might break it. And in this case you do. You could see it happening. A little love at the 100, just support, that's it. But the chart was telling you the entire time that the downtrend was intact, and you cannot mess with what you see, right? This is telling you that the downtrend is intact. As long as that separation exists, you're safe. The only thing you have to be aware of and prepared for through stops is the wicks, right? The volatility. But as long as price is trading below these levels and you have that type of divergence in there, you're safe. It's the market's way of telling you, even through all of the chaos, what's really going on. So don't think that these things can't go to places that you didn't think they could. Because when you see a chart like the weekly we just showed, with all those big gaps, yeah, price can go wherever. It's going to take the path of least resistance. Right? That's basically what happens. Now, we look at our daily chart. And what's the 200 MA? The 200 MA is our basic bull-bear indicator, right? And what do we have up here? This kind of test and fail, test and fail, test and fail of the 200. One of the things that's difficult for many of you is time, right? Watching time tick as you go through, waiting for this chart to demonstrate that it wants to break down. Right? But we know the 200 MA is our bull bear indicator, and since we broke up here on the daily back in November, this is the first attempt of the 200. Those first attempts typically fail. Or if we were pulling back, that first attempt would bounce. But in this case, we're moving higher, so we meet the resistance level at the 200, and we can't break through. And, you know, don't tell me that's not a relevant level, right? Like it's wick, 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 and then a rejection, right? And as it breaks down, comes back and takes out that previous wave's low. Now, here we break the 20, come back to the 50 and the 1,000, and we don't hold it, right? So you don't hold 1,000 days of price history, and you don't hold the 50. Really shouldn't be any question on what's going on, right? You break down. This divergence, the opening space between the two EMAs, is telling you that it's unlikely to hold. Even with these three green candles, the divergence between the 5 and the 8 held, and it ends up breaking down. And it breaks down really hard. A little bit of love at 100 days, like merely support, taking a breath, and you know that it's not going to stick because of the divergence, right? That separation represents momentum, and you can see it quite clearly. First attempt at the 20 fails, and that's how we got here. And are we done yet? Probably not. Let's look to the 4-hour real quick. You can see how relevant this level is down here that it holds. You know, it's obviously a problem if it doesn't. Now, how do we get faked out? What gets us what fakes us out? Is it the market or is it ourselves? Like, who faked who? Do you fake yourself out, or did the market fake you out? Now, this is the daily chart of Apple. Now, Grant, we're showing this for you. All right, now this is like the monster of all charts, right? Apple. Everybody will tell you never short Apple and all that kind of stuff. Well, if I took the AAPL off of here and just put, you know, 1, 2, 3, 4, A, B, C, D, E, it's just a chart. It's just a chart. If you convince yourself that you can't trade it because of some mystery, then you got to stop thinking about it. It's just a chart like anything else. Does it have solid fundamentals? Does it trade clean? Yeah, all of that stuff. But it will tell you, the chart will, the same thing that any other chart will tell you. Right? We're just doing what we're told. And we're applying the handful of rules that we use to keep ourselves safe. And what do we know? When we're trading above all support, like you see here, at some point in time, like this is a runaway freight train, right? You can see the momentum here. If I take the candles off, all of a sudden your anxiety levels come down, right? But you take the candles off, and you can see there's nothing really to be concerned about, right? The wind is at your back. Up here, there's obviously something going on. Now, we print a sell signal, and you know, we can see that we're breaking the 20. We can see that we've staircased it down to the 50. Again, when we have the kind of divergence at a major moving average like you see here, it makes it hard to hold. Now we flip our candles back on real quick, and This would have scared a lot of people. You know, you have that impulse down and then it looks like you're going to bounce. But what happened? You met the 20. First attempts typically fail. And you didn't even really hit the 20, you just kind of tickled it. You know, we could have put the 21 EMA and maybe that's hitting it. But either way, like, you can really see what's going on. But importantly, you can see what's going on with trend, right? It's one thing to understand and have your head around what you believe price is doing. That's great. But what's the trend doing? Especially when the market's volatile, because that's where the shaking out happens. And all through here, all that you ended up doing was testing lightly the 20, rolling over, and breaking the 50, gapping down. So what is this? This is the ice, right? That's why it's light blue, because it represents the ice. If you break the ice, it's a problem. You don't want to fall under the ice, right? And that's where we are now. What makes it even more significant is that you gapped down. So breaking the 50 is one thing. Gapping down through it is another. It's that much more concerning. Now, why did this, technically anyways, why did we have this kind of move up here? Hard move down, relatively normal retracement. Basically back to 50%, right up in here where you wick the 20, and then you break down. So the volatility happened. Why? Well, if you look to the right, you're going to see the that volume profile, and you'll notice that it's gray. The gray represents light trading. Those volume gaps in that gray magnify the downside. And that's why it just dropped like a rock. Because there's nothing in here to hold it up. Right? These gaps, there's no money there. There's no volume there. So when price meets it, it slices right through. Same in here. Now, do we know that we're going to gap down like that? Of course not. Right? We don't, there's no magic here. We don't have crystal balls, although sometimes it feels like it, but we're just following what money does. That's it. And it's repeated behavior under certain circumstances. Momentum, could be news, there's all kinds of things that can move markets. But when markets move, do you know where they're going? You'll know because current price looks for past. Just like on our Bitcoin chart where we dropped these 3 levels down. Did they seem crazy at the time? Sure. Crazy in hindsight? Not at all. Simply because current price looks for past. If you take away anything, take that away. Right? That's how you can try and start to plan where price might go. And where are we sitting right now? The upper value range on Apple. But we want to look at the weekly too. What do these long-term charts look like? So although the daily looks like death, what's happening on the weekly? Well, we haven't printed a sell signal. And we came back to the 20 and we wicked it and have bounced a little bit, which is kind of interesting, isn't it? Could this just be a test of pulling back to the 20? Could we be doing that? And then bouncing and taking out the previous wave's high? Because we show all the time, right, when you take the previous wave's low out. But what does it look like when you take the high? So on the short, and this is a problem with Apple, right? Because on the daily, it looks like death. It really does. But on the weekly, technically, I'm looking at it going, It held that 20 MA. At least so far. We got another day left, obviously. Now, if it was to break the 20, it's going to look for the 50. Right, now you'll notice on the right side of this chart, where all that gray is, it looks very similar to the daily, where there was all of that light volume, a little bit of gap up there too. But ultimately, price did break through it. So you have to trade what's in front of you. And you have to analyze your chart, not think your chart. And I think this is one of the tricks, right? That one of the games that we play with ourselves is that when you're looking at your chart, are you looking at it through what you think it's going to do because that's what you've heard, or that's what you'd like, or that's what you need? Or are you analyzing the chart? And for me, those are two different things. And I have to admit that I think when I was a younger trader, I was thinking the chart more often than I was analyzing the chart. And the difference is helping you control your own bias, right? And it's all part of that blocking the noise thing. So the daily, although this is, the weekly, although this is a real big pullback, haven't triggered a sell signal. And we're getting some love at the 20. All while the daily looks like a falling knife. The real test is going to be the 200, right? That basic bull bear level. So if we go to 269, 270, something like that. Well, there's it's right in here. Right in here. So that a little bit of time and price, there's your 50. Maybe you hit the 50 on the weekly and bounce. We'll see. But I don't want to bet against the weekly Apple chart. That's for sure. You know, if you can pull back and break the 20 and find the 50, and because you've hit it before, maybe this time it breaks, well then you're in for a hell of a trade to the downside. There's no question about that. But it's got to lose that 269, 270 level before we can really see what's going to happen. The 50 weekly is 262. So that, that could be a wick that hits that. We will see. If we look at our, so down here we have our Z-score dashboard. And regardless of time frame, right, the trades that you really like are the ones where you create a buy signal and you get a break of this zero level basically at the same time, right? Whether it's the identical candle or one or candle or so either side of another, it's usually in and around the same level. And they turn out to be nice runs. We don't have a sell signal, although we do have a little bit of a break of the zero level on the Z-score dashboard. But we have very little relative strength. Or no relative strength. So without it, it makes it difficult for price to move higher. And we've got so many bloody charts to look at because there's been so much chaos. But let's look at, here it is, the NAS 100. So if you know the Qs, this is the NAS 100. It's similar setup. And this is a futures contract. So technically very clean, right? There's your buy signal. Is all you do is what you're told, and you would hold that trade until the chart told you not to hold it anymore, right? And you have a nice example of getting your buy signal and breaking the zero level to the upside roughly the same time. Again, those are strong conviction trades for me. You'll see it again over here. Right? We're just doing what we're told. Now, is this weekly? This little, what is this? Probably 7 or 8 weeks. Yeah, that's a, you could stay in that trade. They don't all run like this. But the downside moves are retracements, right? So we know they're shorter. Big leg up, retracement, support at the 50, take out the previous wave's high, and the beat goes on. And look what happens to price in and around this little volatile time up here. You test the T line, but you don't really break it. You don't close beneath it. You get support off that level and you push higher. And all that's telling you is that this divergence here, that's open space, is momentum to the upside. And you have relative strength. So when you have relative strength and you have these candles that get support like these ones did, that's all good news. And you'll notice here, big volume gap. This is the point of control, this thin red line, that's the most dense average of volume. Green candle off the 50, I'll wake up in the middle of the night for those. And you blew right through this gap. Right? Boom, like a hot knife through butter. If you're not using a volume profile, give it a try. It's probably one of the easiest tools that you can use. It comes inside the BluntHouse script here as well. Sometimes I just leave it a separate one so that I can, there you go. So within our BluntHouse indicator, by the way, you have a volume profile. You have room for 9 moving averages of all different sorts for all different types of traders. And you have these buy and sell signals, and it's all customizable too. Like if I wanted to adopt a different strategy, I can do that. I can just simply go into my indicator and change my settings, which will give me different buy and sell levels. So right now I'm using a pretty quick 5/8, right? These are EMAs. You can use a 12/21, 13/21. There's all different types of setups that you could use, but it's all customizable. So whatever your sweet spot is, you can use this chart or this template indicator, whatever we want to call it, to get you where you want to go. In addition to that, we also have the take profit and stop loss levels, right? So we can have our leverage level set in here, anywhere from 1 to whatever you need. Take profit levels, there's 3 different levels, and when we set these things up, they show up on our chart. I'm just going to take that off. So what I just did was I flicked off the auto hide of when you hit your target levels, right? That's why they disappeared, but I'll just show you. There you go. So now they're off. But in this case, 25, 55, and 1 something were the profit levels that we had at 20 or 25. I don't even remember. But you can see how it showed up on your chart. And they're all adjustable so that, if you're scalping, obviously shorter time frames, maybe you're using a little more juice. But I mean, for longer time frames, you'll see them how they look on your chart. And it gives you a real good visual on, hey, am I in a sweet spot, right? Can I see, like, all of this is all that we see here because all the other targets were hit. That's why it's gone. So I can take this off entirely. There we go. And I think it's great for trying to get an idea of, okay, based on X leverage, what do my take profit levels look like based on the time frame I want to trade? You can see it literally on the time frame you want to trade. Right? This tool is available on TradingView as a private script, and it's also in the Trend Spider store. That's where you'll find them. Or just get in touch with me and I can help you as well. So here we are with the NASDAQ 100 on the weekly, touching the upper value range. So you can see we've got 3 equal wicks up here. Nothing really wants to punch through it at this point in time. And this volume gap to the downside and the point of control. If this breaks down, we print a sell signal and the market pulls back, where's it going to go? Well, automatic, we look to the 20, right? Because we know that when we're trading above all our support, we're going to pull back to a major moving average, which in this case will be the 20. This volume gap will probably make that a quick trip, as we've shown a million times. And if it doesn't hold, it comes right back to the 50 and the point of control. This is a significant draw for price, this level in here. So if we do roll over, this is where I would expect it to find. Not in a day, not in a candle, not in a week, but in a respectable amount of time. Right? So I think one of the things we get lost in context is time, and how time affects what we're looking at on our charts. It never seems to go as quickly as we want it to when we're on the right side of it, but it happens way too fast when we're on the wrong side, right? And those are the things we want to avoid. So we know what our weekly looks like. We know we're a still bullish chart, and that we, although we printed a red candle, we haven't broken down. Right? So that red candle that we're seeing on the daily is kind of a representation of these few candles in here, right up in here. The fact that we're catching support off the 50 is a positive thing. The downside risk is obvious, isn't it? This gap. Point of control. So you see all this past price? This is a literal visual example of the bench that we talk about. Right? So we lost the 20, came back to the 50, testing it again. The first attempt got a little bit of love, pushed higher. Now we've got 2 equal points in price. Notice I didn't call it a double top because it's not that yet. There's basically 2 equal points in price. If it breaks down and breaks this kind of center channel in here, then then it's a double top. Right? And that would suggest other things. This big gap being one of them is the problem that you could face. But is it reasonable to expect to pull back? Yeah, of course. What do we look for? Well, we use fibs, fractals, and filters. So in this case, we throw in the fibs. We've looked at different time frames, right? So that's the fractal application. And the filters. What are we using as a filter? We're using the T-line and the 5 EMA as a filter. Trade on the north side of it, and it stays open like this, you stay in the trade. Don't overthink. Just do what you're told. 3 red candles. A lot of people are like, oh, that's the top, I'm out. But we knew those 3 red candles were it's a slight retracement. The trend was still intact to the upside. It's not that hard. And when we look at our fibs, here's 50%, and here's 618 down here. Is it reasonable if we were to roll to look at 50%? Sure. If 50% retracement is completely acceptable, see them all the time. But it's 50% of what that makes people uncomfortable? 50% of this move and 50% of this move are 2 different things. Still technically appropriate in the way we're looking at them, but because this is parabolic, any kind of rollover feels like the sky is falling. But if we were to kind of catch that 50% retracement or 618, it'll be completely fine. It's just because of the parabolic moves that these retracements are so painful. And then they spur other discussions. Right? Well, are our markets going to crash? Are we heading into a recession? Could it be worse? Blah, blah, blah. I don't know. Nobody has the answers to that. The only thing that has the answers is the money. And that's what we follow, right? It's a real-time representation of what money is doing, not what people are saying. So let me ask you, if you were to listen to Michael Saylor all the time, like he's a god, where would you be? You know, Michael Saylor was telling you to buy up here. And in all fairness, Michael Saylor's been telling you to buy everywhere. But the point is that you have to be able to think for yourself. And you know, we had a real interesting conversation in our Telegram this morning. And my good friend Rico Moneybags made a really good point. He said, sometimes it feels like people don't want to learn, right? And I totally agree with him, right? Which is why our Telegram group is not a call room, right? It's not, we don't sit there and give you tickers. Because what did you do? What did you learn? You actually need someone else to feed you a ticker? Really? That's not how you want to be, is it? That's not what you want to be when you grow up. Someone who needs, like a little bird that needs to be fed? Come on. You want to be the one that goes on the hunt so that you can feed yourself. Not in front of the mirror, quaffing yourself, waiting for mommy to come home with another worm. Go find your own worm. That's why we're here, isn't it? To monetize the chart? That's the only reason. It has nothing to do with anything else. Nothing. You know, the XRP army, they love XRP. But does it love us back? Maybe you're just accumulating. I don't know. I don't know. All I know is that when I start to stretch out the time frames, I'm realizing that this is a falling knife. And I'm not saying that to offend anyone. I'm just telling you that way back here in October, it's always October, isn't it? That you got a major signal. By the way, this wick came all the way back to 1,000-day moving average. Is that an accident? Nope. That's where price has been before. It's representation of time and price. And when things break down, they look for other levels. This is just signaling that this was a massive, obviously massive move to the downside. But I think the fact that it would reach for it was probably a signal of larger things to come. But if you're not looking at these longer time frames, all you're seeing is hope, right? That's just because this is what we're looking at on a daily basis, right? Is this stuff. Oh, a little bit of hope fails. A little bit of hope fails. Look at the longer time frames. You're going to get a real good look at what trend is doing, at where price is really going. And, you know, look at this big impulse above the 5 EMA and the T line, well above the 20. Massive move right off a major moving average. Love that. But you got to trade what's in front of you. And this was a big impulse up, and you have to be very careful with these things. And boom, it's just been straight down. Remember, this is a weekly chart. And since October, there's only been 8 weeks in total that were green. And at no time did you change trend, right? The divergence between the T-line and the 5 EMA is really, really clear. And even in here, when you had a candle that wicked the 20, it didn't change the trend. This is why I take the candles off. Right? You wicked the 20, but you didn't do anything. You even closed below the T-line. Nothing. Now, if this candle stopped you out, which is quite possible, if this candle stopped people out, what do we know now? Right? So that's what we would have in front of us. Whoops. What do we know? We know that our downtrend is still intact. This divergence is telling us that. Another wick of the 20, another failure. Those are not signs of strength. Right? And you have to acknowledge, honestly, what you see on your chart. Now, if you're on the wrong side of this, so what do we talk about? We don't make long trades when price is doing this. So in other words, if you were wanting to buy this long, and this is probably where everybody chews themselves up. If you're trying to buy this long, this chart presents no opportunity for us for months and months. Simply because it is trading below the T-line, below the 5 EMA. There's no reason to be buying this chart, especially if you wanted to, build a bag. If you're not looking at this weekly chart and you're working off the daily, you're going to get excited in here and this week and in this week and some, any green candle you're going to get excited about at this point. The weekly chart is telling you not to touch it. And I'm sorry, but that's just the case, right? Why would you touch it? It's not giving you any reason to buy it. But someone is going to be telling you, oh, you're never going to see prices this low again. Want to bet? What do you think price is looking for on this weekly chart? If I can find another feed here. See if there we go. What do you think it wants? You broke the 200, you broke the 20, you broke the 50, you broke the 100, you broke the 200. Open and diverged, open diverged, open diverged, open diverged. Not going to hold. Sorry, not happening. I don't care about ISO this, I don't care about how long, I don't care about who buys it, I don't care about who supports it, I don't care about who wrote about it, I don't care about who tweets about it, I don't give a shit. The only thing I care about is what's on the chart. And that's all you should care about too. Because the only job you have is to monetize the chart. And if you don't get your head out of your own butt, you're not going to be able to understand what's actually looking you right in the face. This chart's a nightmare. An absolute nightmare. Way back down, now we've talked about this before, way back down here you have your POC, point of control, on the volume profile. Now, if you were looking at this weekly chart, looking at this big volume gap to the right, trying to tell yourself that, oh, it's going to bounce any time now. Come on. No, it's not. Oh, how many bought this green candle? How many? Tons of you. Look where that candle closed. Right at the T-line. Is the T-line and 5 EMA diverged down and to the right? Yes. Do you have a buy signal? No. Do you have any relative strength? No. So what are you doing? You're going to take your whole paycheck and you're going to buy that candle. And the whole time you're telling yourself, oh, this is the bottom. Oh, shit, no, it's not the bottom. Oh, no, it's not. Now, if you're leveraged, you're done. If you're spot, you just have dead money. Neither is a good thing. They both suck. And this is risk mitigation, right? Everything you do at the beginning is so you don't end up in that very same place. And part of that is not lying to yourself. And if you don't know how to read price on a chart and you're taking said paycheck and you're buying just whenever you get paid, then oh my God, take that paycheck and take some lessons. I don't care from who, somebody. Someone who's done this for more than 5 minutes. Where do you guys think price wants to go? It's going to want to go back down here. Sorry, but that's what it's going to want to do. This past price is a draw for current price. And when there is no more moving average support, you're looking for that bench, right? So this is Wile E. Coyote going over the edge, and this is the branch sticking out of the cliff, hoping to hook his pants on it. Basically, that's what's happening here. And if that branch breaks, then potentially you can go all the way back to the beginning. But certainly back to the point of control. And again, this big ass volume gap does not make that more difficult. It makes it easier. Right? All your support has been breached. This is a weekly, by the way. So you're looking for that past price as a last resort. And if you notice the 200 MA in red on the weekly, usually you'll find the 1000 MA in the same neighborhood. In this case, it's a little farther south, but usually they're roughly the same. No, like this. Come on. I don't know. You sense my frustration a little bit? Just because I don't know how many times people need to be told, just based on the chart, what's really going on. Let's back this up. Let's go or move this out forward. Let's go to the weekly. Now, even if this is your first time watching these streams, or the first time talking about technical analysis, if you were to look at this chart and see this kind of setup, you'd be like, wow, that's weird looking. Like even a newbie would go, huh, that's like kind of strange. And it is. Those two extended wicks, you know, the bases of these candles at the tops are roughly in the same neighborhood. You know, those two equal points in price are often relevant. And why are they relevant? Like what could be going on in someone's mind when they're looking at this chart? Well, let's just say for interest's sake that they bought down here and they had this beautiful move higher, but they didn't cash out. What happens when you get back in that neighborhood again after seeing the pullback? You're going to go, you know what, this time I'm going to take my money. And I think that happens quite frequently. And then when people take their money in enough scope and scale, well, then price drops. Now, why is this white line here? This white horizontal line is here because this was my target. Why is it at that level? Because current price will look for past price. And I think the market's going to prove me right. But we're not any more aware, unaware, smarter, dumber than anybody else. All we do is follow. We don't have to front run. The front runners are the ones that are getting their chopped off at the knees half the time. Right? Let the market come to you. Don't force it. You don't have to force it. Just let the market come to you. Again, it's not pin the tail on the donkeys. Could I have, taken the top of this wick and the top of this wick? Sure. Right? But again, we do this on the fly in these streams, so I think the point is well made. Are there other reasons why Microsoft might be falling? Sure. All kinds. Are they interesting? Yeah. In conversation? Sure. Could they have anything to do with what we're looking at? Maybe. I have my theories. But that theory didn't dictate what I did with the chart. It drew my attention to the chart. It is not the reason that I execute on the chart. It just gave me a very good reason to look at this chart and go, maybe there's something I should be paying attention to. My theory. But it had nothing to do with how you traded it. That's all. And at the end of the day, maybe this could be the Apple chart or ABC 123. It's just a chart. It's just a chart. And what's amazing is that price will behave similarly on all charts and all time frames. I mean, we live in a fractal world. What you see on one time frame, you'll see on another time frame. Are you trading above all your major moving averages and all your support? Yeah. Are you expecting to come back and at least test the 20 someday? Sure do. And in this case, you broke it and print a sell signal. Do you have any idea what comes next? No. It's not bewitched. No one's going to move their nose and magic happens. It's not that at all. It's all you know is that the market told you that you should be selling. Ironically, after that funky looking top to the left. So there's your sell candle. After a big impulse move and a weird looking top. So you take the sell signal and you short it. And there's lots of ways to do that. There's inverse ETFs. There's all kinds of things that you can do. Options, obviously. So now you broke the 20. Of course, that second candle that prints after the sell signal is often a back test, a little test candle, which you see here. So the back test candle, I'm just going to blow this up a little bit for you. The signal, although you see the signal itself sitting above or below the candle, this signal probably would have fired somewhere in this level here. So you could have even waited till the following week to take this trade to see if it does back test. And I know someone who does that religiously as part of their execution. The signal fires, and it doesn't matter the time frame, right? We just happen to be looking at the weekly. It could be the 4-hour, or the hourly, or the 10-minute, or 15-minute. Signal fires, but doesn't take the trade. Waits for the back test to come back to usually, a major moving average or a level of, you can see in here, support, resistance up this level. And then the following, that's where you hit it. By that point, you can see, and I'm just going to take these candles off, maybe. There we go. What you can see is the divergence that started to take place. And on the weekly, because of the time frame, you have plenty of opportunity not to make a mistake and to correct if you do. But that backtest candle is trading now below the 20 and doesn't break it, and that's a signal. That failure is a signal. And it's no different than when we talk about, and I'll just shorten this time frame up just for conversation's sake. We talk about when to re-enter if you get stopped out. Right? Well, we talk about how, let me find a, let's see. This is a good example, right? So you're short, and then you have these are 15 minutes, so you have these 4 15-minute candles. If these 4 15-minute candles, if they happen to stop you out, the divergence is in place, and you can see points and flats indicate changes in directions, right? And look what this prints. Nice big point your eye out right in here. So divergence holds. You're still in a downtrend. This is where you would re-enter, right? You wait for price to come back to the T line, and then you hit it again while the trend is still intact. And that's basically how I play that stuff. This was your opportunity to get back in the trade. And when I say stopped out, I don't want you to feel like that was a bad thing. If you got in this trade at the right time and you did happen to get stopped out, well, guess what? You got stopped out with profit. Bank that and you have an opportunity to re-enter again safely, knowing that this isn't a reversal, right? That's what many people would be thinking. Oh, that's a reversal. And I get it, right? You break the T line, you're trading above it, but notice that you haven't printed a sell signal. And then those two little short time frame indicators point down. But that just creates the opportunity to get back in the trade. And the same would apply to the upside where you can find those things. Let's look at, here's another example. You'll see this all the time. So now you've got price moving higher, you break the 50, that's all good, right? T-line 5 EMA is open. This sideways move here, so you have the big impulse move up, and then price starts going sideways. Right, now it's come back to the 5 EMA, and look what happens. It rides up. Impulse up, the sideways stuff, if it sticks and hits up in the 5 EMA and you have the divergence like this still apart, that's an opportunity to add to that trade. These 3 or 4 candles that often appear after an impulse move higher that everybody wants to short, when they go sideways like that and they don't break our filter, price usually moves higher. Now you break the 20. Little retest that fails. Now, this is just telling us you're okay to stay in the trade. Right? We just trade, this is a 15-minute chart, so it's going to move pretty quick. But I mean, this is all tradable stuff. And when you look at this weekly chart, are you more inclined to make longs or shorts? Shorts. Going all the way back to October, mid-October. You'd be primarily shorting this chart. Is there any opportunity to make money long in here? Not really. A little bit in here. But look what happens. First touch, this is a big impulse up to the 50. You hit it and then you just reject. So this is a failed breakout. First touch off the 50 fails, come back, take out the previous wave's low. This goes lower. At least for now. But the chart wasn't lying. The chart was not lying at all. Now, let's look at Nebius. Just let it load up. There we go. So this is a weekly. I want to draw your attention back here to this level in here. This is your lower value range on the volume profile. But why I'm showing you this is because here's your breakdown. Just like we talk about every single stream, right? Trading above all support. Break the 50, find the 100. break the 100, find the 200, and so on and so on. This kind of support level in here, that lower value range, creates a second little bottom. And I find that these, especially off weeklies like this, but if you can find a bounce, like a second bottom off the lower value range, those typically, I find for me, have very little risk to them. Like, you know, the lows have kind of already been established. And I find if you get that kind of second bounce, there's your first and there's your second, they often turn out to be trades with minimal risk and really nice upside. And this chart does not disappoint, right? You know, you get that little bounce, you break the 20, you break the 50, and you knew you were going to do that because the chart was telling you that the divergence here is so strong that that momentum will push price higher. Right? You get a little bit of a gap up here, sideways, you come back to the 5 EMA, bang, big green candle. And what are you doing in these cases? Now you're looking for previous waves highs as opposed to the lows. And at no time on this weekly chart, even with the red candles thrown in for good measure, do you print a sell signal until way over here. So this is a great move, right? From 20 bucks. You know, you probably would have 120. That's $100. That's a nice trade. First touch of the 200, you get some love. You do breach it though, but you do get some love. Now you've taken out the previous wave's high. Consolidation, breakout. Do you have any reason to exit the trade? Not on this time frame. Like, look at this candle here. That was an ugly red candle when it was when it hit that level at 200. But when you see it after it's closed, you're like, damn. It might be red, but that's bullish to me. You know, wick this level, push higher and close above the 5 EMA on the weekly, that's bullish. We just have to appreciate that what goes up does come down at some point. And what's the risk on this chart? You roll over and, you know, you find the 20 and find the, in a case like this, you usually find the lower levels, right? Because of the momentum. But you trade what's in front of you. That's all you can do. I'm not going to think about what this company does or what this chart may or may not do. The only thing I can do respectfully is just analyze it. It's still a bullish chart. Still has upside. Don't like the monthly doji yet, right? I don't like that candle. And, you know, if you come back to the T line at 229, you know, that's a significant pullback from 290, isn't it? So this thing has a lot of spank, but you don't want to be on the wrong side of it when it comes back to earth. And how do you prep yourself for those types of opportunities? Well, you're going to look back, right? You're going to try and shorten your time frames to see if you're getting a bit of a rollover. That's all you can do, right? This thing could print a big red heavy candle, simply wick the T line and move on. Right. On the daily, it looks terrible. Not like that bad, but I mean, you see it. So here you are looking for what? The 20 on the daily. You break the 20, you're going to come back to the 50. First attempts, in this case, moving down, should get a little bit of a bounce. But if it doesn't, and you fall into this gap, you already know where price is going. And what you're going to look for, we're going to look to see if we print a sell signal and get this kind of divergence between the T line and the 5 EMA to the downside. And again, throw fibs on here if you want to get an idea of where price might go. Let's use the weekly because it's a little, I'll just take this. 6 of one, half a dozen of the other at this point. There's 618 right at the 50. Or sorry, 20. Is that a legitimate target? Sure. So if it breaks down, I'm going to look for 618 and I'm going to look for the 20. I'm going to look for the 20 anyways. Because this thing is way overbought. Still bullish. Yep. Look at the relative strength. But you have to have your head on a swivel, especially in this market, when you know charts are bloated. You really, really, really have to be prepared. Whether that be dry powder, however you want to do it, taking less risk. What am I looking for here? MicroStrategy. Here we go. Your strategy, or MicroStrategy, whatever we want to call it this week. Now, we've shown this chart before in our streams, and we nailed this. Absolutely nailed this. Talking about how price was going to come back here, and it did. And if I recall, even in our streams, we outlined all of this. This is that bench, right, that we showed in the other chart. This is that bench. Price is attracted to it. Here you're sitting right on top of the lower value area on the volume profile. Failed breakout. Look at this. Take out previous wave's low. This is a textbook. Look at the divergence between our filter levels as they approach major moving averages. Why am I telling you to analyze the chart as opposed to think on the chart? Because if you're analyzing the chart, is all you're going to focus on is major moving average, divergence breaking it, means I'm probably going south. I know the 50s here, I may see a little love, that's fine, but the divergence is still intact as you get to that level, telling me that what? Probably going to break down more. Trend is important, just as price is. This green candle doesn't break trend. Gives you the illusion probably that it was going to at one point break the 50, right? Start pushing this up. Might look like it's going to hook, but no. We were being told the whole time what price was going to do. And if this candle flushed you out, got you stopped out, well, you know it's the first touch after breaking it, so it has a higher probability of failing. And it's appearing while all of this divergence is downward and to the right, which suggests that the downtrend is still intact. And guess what? The chart didn't lie. Break one level, find the next, break that level, find the next, break that level, find the next. Is there any opportunity to make money long in here? No. Any opportunity to make money short in there? No. So the point is, when you're trading on the sell side like here, you should be short. Trading on the north side, should be long. And as soon as it looks like, you know, it might roll over, or the chart tells you that it's rolling over, then you change gears too. You're just following. Right? You're the person driving the limo of all the wealthy investors, and you're just listening. You're just listening to the chart and doing what it tells you to do. I think I want to go down. All right. I don't think I'm going to hold here because it's telling us this. And you're like, okay, I got it. I'm not going to argue with you. You know more than me. That's it. Let's look at oil, because it's telling us a real interesting story too. And I'm going to take the volume profiles off. Whoops. 1 second. Okay. This is the same oil chart we have used forever. So if you've followed these streams, you'll be familiar with this chart. That solid blue horizontal line is $61.66. Right? And we know when we called that. Right? We called that up at the 95 level. Why did we use that as a target? Well, simply because we were looking for that area where if all else failed and you had to hook your pants on the tree branch sticking out of the cliff, it would be this level in here. So I'm picking up these two skis, the bottom of these two skis, and I'm trying to pick up like an average level in here, and I can continue to go back, right, and I'll find the same level. Again, it's not pin the tail on the donkey, but it's certainly get the pin on the donkey. That's what we've done. That's why that level was chosen. It gets really interesting when we throw our MAs up. I'm sorry if it gets a little noisy. But it's an example of breaking levels, those first bounces, trend, and current price revisiting past. It's this chart really is a culmination of all of that. But most importantly, if we go back to when all of this started, way back here at 60 some odd bucks, whatever that was, and price went nuts, right? You break through everything, and you can tell based on our filter that, you know, this is a parabolic move. You can see the distance in there, right? That's all momentum. But we also know that current price is attracted to past price. So anyone who trades oil would have to feel relatively confident that when things calm down and price reversed, it's going to go where it's been before. So if you were short, could you be short to the 20? Sure. But look at in here. Right now, I know in one of the groups that I'm in, we've talked about this chart. All of this is past price. All of like the 200, the 1,000, the 50, that's a 100 and a 500. And of course, we know how relevant that level is as well, the 61.66. As price is moving down, all of this is a draw for price. Anywhere, you know, I like the 50 as a good benchmark, but I mean, I'd be short right to the 50, if not less. Now that you've found a home, right back in here with all of these MAs playing around, that's a lot of support in here. So maybe you chatter for a while. Could you get a snap back up? Sure, that would be appropriate. News or no news, right? You could bounce off the 50 and try and test the T line or the 5 EMA again. But as far as a pullback goes, you just had to know that once you broke the 20, you were going all the way down here, because there's too much here that acts as a magnet for price. And that's exactly what's happened. And, you know, although this is a little bit of a tornado, can you make a case to come back even down to this level? Sure do. This is a big gap, so there's nothing here on the weekly. Nothing here. So as price gets into that area, it could also just drop and find a level where price has been before. So this will be really interesting to watch. But the point is, don't be surprised when you push higher and then you start to retrace. You'll have an idea of where those levels will be on the retrace, because they will be where it's been before. And you can see, condensing this chart, this is a very, very dense level. So it's easy to see how we got in there. Real easy to see. Let's take a look at, whoops. Oh. Well, while we were sleeping, so we looked at this chart like only a little while ago, and here we are sitting right now on the 20 on the weekly. This is Apple. Yikes. There you go. There's your 100. You're going to look for the 200. Break one level, find the next. Now you have this impulse down. You'll probably get, a little bit of a push higher in the next couple days or two, or a snapback. But I mean, keep an eye on the trend, right? It's the trend that matters. Price is obviously important, but this trend is still down. No matter what it had you believing in here, still down. This filter method for me has been a godsend because it's kept me out of trouble, right? Kept me out of a lot of trouble. Let's look at Zcash because this is another one that had some really strange movements. There we go. Look at the love you get off the weekly from the 50 MA. Like, this is to the penny textbook. But even with the volatility, does it behave in an unexpected way? Not really. It just gets there and back really fast. So, a nice bounce off the 50. Anyways, those green candles off the 50, you wake up in the middle of the night for those. And the filter opens up. This is a big impulse, right? So when you see these kind of equal tops, like you see here, you'll see them all the time. Those show up after impulse tops. That's usually a sign that you might be fading, and that's what does happen here. And where do you expect to go? To the 20, right? That's kind of like the equator for where price is going to want to come back to. When the horse is too far out of the barn and wants to get back to the barn, the 20 is the barn. So you're still in a downward trend here until you get to the 20. You're looking for that bounce. Right? That's what you really want. Let's look at Google. Google's another one. Right back to the 20. Do we panic? No. This could just be another situation where you pull back, retrace to the 20, you bounce off of it, and then you take out the previous wave's highs. Put the volume profile back on. Don't hold the 20. Well, look to the 50, and I think you have to look to the base of these candles as well. And then the upper value range. Somewhere in that neighborhood as well. So there's a lot of things, if they don't hold, it could be really, really slippery. Let's take a look at Amazon. And I'm finding the weeklies will take out a lot of noise, right? When you look at the dailies, sometimes you're like, oh my God, I can't tell what's going on. Just go to a longer time frame, and that longer time frame will smooth out a lot of that noise for you. Now, this stock really likes the 100 MA, it looks like. It seems to get some support in here, and that looks like what it wants to try and do again. But do you have a higher or lower probability that if it was to come back to the 100 MA, that it would fail? Well, because it's hit it a couple times already, that probability is higher. So if you're short, you're going to be short to the 100 in this neighborhood, maybe even down in here. But you're going to want to see if it holds. If it doesn't hold, then you're probably in for a real nice runner, right? Because you'll give up a lot in order to look for the next level. If you bounce, well, then you know what you're going to be up against. You got to break through the 20 and the 50 to the upside to work towards taking out the previous wave's highs. It's just rinse, repeat, rinse, repeat, rinse, repeat. Tesla, breaking the 50 as well, working its way towards the 100 MA. And, if we can be honest, the bottom of these candles and then in through the tops in here, it also gets us. See? Current price looks for past price. Doesn't mean it's going to stay there, but it looks for it. And that's important because it helps you, or it provides you with targets. That's what really a lot of this is about. But here's the thing, you actually have to execute on the targets, right? So when I say, you know, short to X, like if you were short to the 100, you better damn well take it, right? Like you better take your profit. Because, you know, some of you will just hang on and hang on and hang on and hang on and then give it all back. Right? And you don't want to be doing that. That's not the habit you want to get into. Right? We've talked about this Walmart chart for a while and how it was a little sus. And I think it's showing us for good reason why we felt that way. So now we're just doing what we're told, right? Chart tells us to sell, so we sell. Our filter opens up, right? That divergence between the T line and the 5 EMA. Trading on the south side with the volume gap to the right. Now if the T line and the 5 EMA get a little bit closer to the 50 here and they're still open and diverged like that, chances are price doesn't hold. If they close up and look like they want to, you know, turn over or do a sharp reversal like you see in here, well, that's a different story. But right now, I'm just analyzing this chart, not thinking about it, I'm analyzing it to see if our filter level stays open as we approach the 50. If it does, and Walmart breaks the 50 and falls into this gap, that's going to be a significant move to the downside. And it already is. And this is what's hard for people, is like, how did this happen? Well, slowly at first, then really, really, really fast. That's what it feels like. Now here's the darling of the market, NVIDIA. We're looking at the weekly, right? Printing a sell signal all the way back to the 20. Looks like it's broken it a little bit. Well, you know, into this gray zone of the volume profile, which we know is light trading. Looks like it wants the 50 in here. And if it doesn't hold, it's bounced before, but if it doesn't hold, then what happens? Well, hypothetically, if you bounced here, you roll over, break the 50, end up in this volume gap, and probably take out that previous wave's low pretty quick. And gets you back down to the 100 MA and then this upper value range. And it's, you know, when you're looking at a stock like this that's really wanted to go really nowhere but up and gets a lot of positive spin from the majority of the market, you know, you do have to have your head on a swivel if you're going to short it for any reason. But I mean, it's a chart just like anything else. And when it breaks the 50 and does all that stuff just like any other stock, it's just as meaningful. Don't be afraid. Just follow the chart and protect the downside risk. There's no need to be scared about things. And I think sometimes that happens a lot. Everybody gets scared. Planet Fitness. Here's another chart that just absolutely tanked. And everybody wants to talk about the why it tanked. Or any other stock, right? If I show you XRP or Bitcoin or this or anything else, oh, why did it do that? And then you hear this big story on why that person believes that was the reason. Maybe they were right. Maybe they're the smartest person in the world. Then there's the people in our group that go, I don't care. Meh. Only worried about what price does, dude. I don't care about what people say. I appreciate your opinion, but I really don't give a shit. All I know is that my system gave me a sell signal while I was trading above all support. So because I'm not a total moron, I will take that trade all day long. And as long as the chart stays bearish, you stay in the trade. Any opportunity to go long in here? No. Short only. So if you're waiting to go long, or you were trying to long this chart, I'm pretty sure it didn't work out well. Look at the damn weeklies, please, so that you can understand what you're up against. And that one green candle on a weekly doesn't mean it's a reversal. Impulse down, sideways. Come back to the T-line and the 5 EMA, and then what? The beat continues. How did you know that was going to happen? Did you have a clue, maybe? Just a little one? A monkey can do this. Break one level, find the next. Is this so? Here's your impulse down. Notice anything? Sideways? Back to the T-line and the 5 EMA? Did you notice that you haven't had a close anywhere above? They're all below. This is still very bearish. This is what it is. Right? The only time it's a problem is if you're on the wrong side of things. And the trick is, don't get on the wrong side of things. And it's just as easy as it sounds if you analyze things and don't think about things. As soon as you start thinking, you don't realize it, but you're trying to outthink the market. You don't understand that's what you're doing, but you're literally trying to outthink the market. And it's not going to work out. It never does. All you have to do is follow. Right? Follow the chart. Here's Micron. Weekly chart. Bullish? Yeah, I'd say so. This thing did nothing for the most part for the longest time. Pretty range bound, flat as a pancake. And then all of a sudden one day it opens up. Now, if all you have to do, if you're a bottom feeder, you'd be looking at Micron for sure. Right? Notice what happens here? Buy signal prints as as relative strength breaks 0 on the Z-score dashboard. Weekly chart, buy signal, break of 0 after, coming out of the red. I'll take that all day long. Right? And when you do, then the question becomes, well, how long do I stay in the trade? So I'll get accused of holding on to things longer than many people think they should, or I should. But I'm only doing this when I have a very strong belief that you know where price is going. And you have to believe in your system, and you have to believe in your chart in order to pull that off. It's an easy say and a hard do, I get it. But you didn't get any sort of sniff that maybe, you could take something off up until here. Right? Even this red candle did nothing to break the trend. Look, it just bounce off the 20, right? We love that. And here we sit. Now, I'm not a huge fan of this candle, because you see dojis like that at the top of bull runs. The other side can look kind of nasty. But again, we don't have, this is still a bullish chart, right? I'm analyzing the chart. I was just thinking about it as I was describing, but and there's a difference. Bullish chart, divergence is there, impulse up, sure, so we know what could come next. We understand we're trading above all support. We understand that at some point in time, we're going to come back and check those levels, but that some point in time might not be today. On the weekly time frame, Micron is outperforming the S&P by 88%. This is why we use the dashboard, because you want to be trading the strongest of the strong, or shorting the weakest of that bunch too. Still a bullish chart, but you have to be aware of the downside risk, right? This is a big impulse up, creates a lot of air. Price doesn't like to get too far away from where it's comfortable. The horse doesn't like to get too far away from the barn. So you'll come back and check levels. But again, it doesn't mean you break down, right? You can have these massive impulses like you see here, and everybody wants to start to find a way to short it. Well, it's a long way from being shortable in a meaningful way. Just like this buy signal and this break of the 0 level to the upside was relevant. And notice here, as you went sideways a little bit, you notice your relative strength stayed solid. You were being told that this thing was still good. That's what the market was telling you. The buyers were still in the building. The desire for this was still there. Come back to the 20 and pop again. The point is that when you print a sell signal and maybe you break the 0 level on the Z-score dashboard, until that happens, I wouldn't be trying to short it. Wait for this in reverse, where you get the buy signal, in this case a sell signal, and you break the level to the downside. Because this can get really, really, really tricky and fast. We're approaching 3:30, so let's take a quick look here at some of the indexes. And I'm going to look at the Dow, and I'm going to take my volume profile. Whoops. Take my volume profile off because it doesn't like it. Oops. Sorry, wrong one. There we go. Let her load up. Okay. So this is the Dow. And this massive run, not unlike everything else we've looked at today, this is still a bullish chart. What freaks me out about this chart is that this big impulse came with very little relative strength, if any at all. Which is odd. It doesn't happen all the time, but it does. But if I go to the weekly, you know, you're trading above all your support. Still a bullish chart. Here's your break of the Z-score level again. I don't like the divergence in relative strength and price. That always raises an eyebrow for me. I may not have an answer for why that's happening, but it's something that always unnerves me a little bit. So, translation, it makes me suspect of this move long term. What did it do in the immediate term? Well, nice bounce from the 50, opens up. There's your divergence out of major moving average, so you know price is moving higher. Impulse sideways back to the 5 and T line. Pop again, and you knew that was going to happen because all of that was intact, right? All that open. And you take out the previous wave's high. Textbook. We're giving a little bit away, though, as we get closer to 4 o'clock. Let's look at SPX on the weekly. Starting to feel like you're giving away a little bit, right? So we're trading above all support. So at the very least, to come back and check the 20 like you did back here would be completely respectable and anticipated. First attempts typically bounce in this case. That's what you're kind of hoping for if you're long. But if you break down, come back to the 20 and possibly the 50. And if you want to get an idea, what does the fib look like on this? Here's 50% in here. And this is 618, right in just below the 50. What does that tell me? Well, if these levels are draws for price, it makes that 618 and or 50% and the 20 and 50, it puts those in play. So if I was short this chart, that would be a range or an area that I would either take profit at, or if I had real conviction, maybe you add at those levels. Right? Like, let's just say hypothetically, although we don't live in hypotheticalville, but if we did, for demonstration purposes, if this was a market top, and you You break these levels, that's a hell of a ride down. This fanning out of your MAs is simply because price pushed higher over time with velocity and momentum. Now, as a trader or an investor, when that's happening in the market to the long side, you don't care. Nobody cares. Nobody looks, nobody cares. And maybe for good reason, right? It's just something that isn't today's problem. But when it comes or becomes today's problem, you better know how to manage it. And the only way you can manage it is by having an idea of where price is going to go in that event. Right? So if we roll over, you know that you can go to these levels quite quickly. You know that if you break the 50, you'll look for the 100. And you know that the 200 is your basic bull bear level. This level is just on here because I was just connecting past price. Again, it's not pin the tail on the donkey, it's just a level that I would pay attention to. I could easily have taken it through here across the top of these candles like so. Which actually makes a little more sense because I can cut across this little bench in here, these tops, this top, and then that bench in there. That's all. No different than we did on Bitcoin or the other charts we looked at when price actually came back to those levels. Right? It always freaks you out when you look at it, but then when it actually comes true, it freaks you out even more. Or it freaks other people out even more. Going to look at Aster really quick because this thing still hasn't gone anywhere. Just flat, 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 flat. And everybody, the people that I know that that are patiently waiting for this, I think you're almost getting bored now, right? Like, it's just not happening. It will eventually, but I mean, it's just not today. And the best way, in my experience, I'll just go to Bitcoin for a moment, to catch an edge is using the 4-hour chart. Like, especially if you're trading stock, right? You'll get these nice little heads up notices that there might be something going on. Microsoft is a really good example. Nvidia, let's see. Yeah. So for me, the 4-hour chart is an on-ramp or off-ramp to the daily. So this is our Apple chart. Let's see, we're up here at 314. Let's look at our daily. So here's our 314 level up in here. So on the daily, that's fair to say that's a top, right? Looks like a top. Looks like a top anyways. But why do we use the 4-hour? Because the 4-hour is going to be my, again, that on-ramp, on or off the daily chart. And this up in here happens at around 1 o'clock in the 12:30, 1 o'clock in the afternoon. On whatever day. Monday? Yeah, Monday. So on a Monday, you get your signal. And on that time frame, it was a reasonable entry. But on the daily, it's a freaking great entry. And that's why we use it. Because a lot of this is timing. If your timing's off, even if you're directionally you were right, but if your timing is off, you could have blown your trade or weakened its effectiveness. So why do I use the 4-hour? Because it gives me this look. I would rather be Get a reasonable entry. See, look, we're trading above all our support, right? Big, massive move up. So we know we're going to come back and test the 20. And what we're hoping in this case that you fail, right? We're sensing this is getting a little tired and we're short off the 4-hour and we get our way. Doesn't seem like a big deal at the time, other than the fact that, you did catch a relative top. Does it look like a big deal today? You're damn right it does. Right? The 4-hour is your cheater entry on and off the daily. And it protects you, especially if you're leveraging in any way. I believe it protects you a little bit. So if I'm trading off the 4-hour and I get my way, right, price goes the direction I want it to go. In this case, it would have been short. If you catch that trade on the 4-hour and it starts to move in your favor, by the time you get to the daily chart, any little chatter you're protected from, right? Because you had that early entry. And with that little bit of chaos you might see on the daily doesn't affect you at all. It just secures that you had a really good entry from the start. And that puts you in the driver's seat. That's important because it's going to keep you from thinking too much and allowing you just to put your feet on the desk and chill out. I love this Apple chart because of the test of the 20, the way that it gave it without breaking trend to the downside. Because this is the kind of thing that, again, you're going to have to trust your chart. It's not your gut yet you're trusting, it's your chart. And the chart was telling us that no matter what we saw that's intended to haunt us, confuse us, whatever you want to call it, that the trend for the stock was in one direction. Now, when I add these candles back, your anxiety levels kick up a notch, right? See all those wicks and all that. Like, that's what it does. Makes your heart skip a little. Take those candles off and take the noise off your chart and just breathe, and you'll get a real good look at what's going on. So no one will take away what you learn in here. And don't be concerned about what other people think. Believe me, I've heard it all. Been called it all. A lot of technicians have. It's kind of the cost of doing business, really. But here's what I know, or I believe, that this is a language. Right? If you believe math is a language, then this is a derivative of mathematics, so a language unto itself. And it's the market's way of communicating with us day in, day out. The only thing is do you know what it's telling you? Do you have that ability to translate what the market's telling you? If you do, you're going to be successful. If you don't, you're always going to be thinking about the reasons why things are happening. This is a real-time representation of what money is doing, not what people are saying. I only focus on what the money is doing and what the trend is doing. Everything else is irrelevant. Everything. And the fact of the matter is that if you're learning this and you're taking information from many different places, sometimes you will feel a little bit conflicted, especially when you're learning. But understand one thing: no matter what you're learning and from who, this stuff is pretty much all the same. Different approaches, maybe different methodologies. I have some people in the Telegram that bought into a very, in my opinion, a very complicated methodology. And, we'll talk about charts and where we think price is going on a particular asset. And I get a very articulate point of view, about fair value gaps and all this kind of stuff. It sounds great. It might take 5 or 10 minutes to explain. And then I'll say, oh, you mean the 20 on the daily. And then you hear, yeah, that's the 20. We both got the same place. Just different way of getting there. Doesn't mean that I'm wrong and the other person's right, or they're right and I'm wrong, or vice versa. It doesn't matter. But ultimately, we're doing the same thing. Right? Kleenex is still tissue. Okay? Just because you rebrand it doesn't make it new. We're analyzing the same things we've been analyzing since Japanese rice traders invented candlesticks. Yeah, that long ago. Okay, so don't get caught in the thick of thin things and sucked into someone else's tornado. Focus on what you do and you do well. Block out everybody else's noise, opinions, points of view, about markets, about what you do, or all of that. Cut it out. It's not important. The only thing that's important is you can identify levels and that you can understand how price reacts around those levels. Because once you get there, you'll be able to look at a chart like this, with or without averages on it, or anything else, and you'll be able to do this too. Drop these levels on, and ages later, bang, they get hit. That is not chance at all. It is having knowledge that you own and you keep and you get to harvest and farm. Monetize the chart, that's the only job. Don't care about what other people say about what you do or how you do it. The only thing that matters is your success. Block all the bad shit out, and there's lots of it. Just focus on what you do. And be patient. Right? Be patient. When you're in a downtrend, don't try and go long. When you're in an uptrend, don't try and short. Simple stuff like that will save you a ton of money. Never mind what it will make you. So instead of always trying to long what you think is a low, right? Instead of trying to long that green candle, learn how to read the chart so that you understand what's going on that chart before you try and trade it. Not that hard. It really isn't. Just repetition and a little bit of focus, right? Treat it like a job, like a profession. If you treat it like a profession, it'll treat you well. If you treat it like a hobby, it'll treat you like a hobby. If you treat your chart like recreationally, it'll treat you recreationally. So just do the little things right, and you'll be okay. We're going to pick this up. Probably, maybe even tomorrow we'll do another stream, because I think we're in for some fun. But I appreciate you stopping by. And remember that this indicator, all these moving, like if you're on TradingView and you have a basic account, you're only going to get 2 indicators, right? Using this indicator will help you tremendously, because it'll give you everything that you need to pick up what we teach here, plus give you all the signals as well. And again, it's available as a private script on TradingView. It's also in the TrendSpider store. And yeah, if you need any guidance or help setting it up, you know where you can find me. I'm pretty easy to find. So take care, everybody, and we will see